Hi everyone, in this video I'll be showing you how to trade US30 in 2024. First, I'll be diving deep how to analyze the higher time frame and how you can enter the market using the lower time frame. So this is a trade I took this week on US30 where I analyzed the market using from the higher time frame down to the lower time frame. So in this video I'll be doing a full explanation on how I got into this trade and showing you the ways you can implement this strategy in your trading plan. So the whole analysis was done from the 1 hour time frame. So I wanted doing this video immediately. The trade took TP, but didn't have time. We were still busy in the market, busy with our community. And if you're interested to join the Forex Trading Empire community, the link will be in the description below. It's absolutely free. So you join the Telegram channel and join us in the space of making profit, and you get to understand how I trade from Monday to Friday. So on this 1 hour time frame, I was looking at this push where price took out this both high liquidity. So you can look at this area where price took out this both high liquidity. After price took out that liquidity, you can see an impulsive move breaking structure to the downside. So after seeing price breaking structure to the downside, looking at all this imbalance and inefficient price action, knowing the price might pull back to mitigate its point of interest. So this point of interest was the point of interest I had in my mind, expecting price to reverse to it, which you can see that price already pulled back to that area. So I had this point of interest locked down, waiting for price to get to the area. So one thing about this strategy is that you have to build a directional bias. So building a directional bias, you can use any time frame as your higher time frame where you build up a directional bias. Then you use either 2 time frame lower or 1 time frame lower for your entry. But in this example, how I took this trade, I used the 1 hour for directional bias and I used the 5 minutes as an entry in the London section because I primarily trade on the London section. So I'll be turning on the section indicator. So in the London section where price took out this both high liquidity, this equal high liquidity, breaking structure to the downside. So after this break of structure to the downside, going into the next day, you can see going into the next day, that same day in the New York section, price pulled back to the point of interest. Because at this point, I know that if price were to respect this area going back to the day that I took this trade price action, I know that price is coming to the downside and this will be my utmost target. But I didn't write the trend down to that target. I think I closed it to a 1 to 10, and this is why that's why my position tools was set to 1 to 10. So going into the London section of that day, as soon as London section started, you can look at this price action. This is where I pay much attention to the price action, the opening of the London section, because that is where there are most liquidity and where price will be taking out the Asian high. So price spiked up, taking out all this trendline liquidity from this area. Then seeing this impulsive move, I know that I'll be riding the trend down, using all these areas as my TP, using the previous day low as my liquidity area for target. So going down, looking at this area where price did this spike, pulled back. So I was expecting price to do a reversal. So I set up my Fibonacci. So if you were in the course, you know that I normally pay attention to the 71 area, and that was when I took my entry. So my entry was based from the 50% area to the 71% area. That was how I set my entry, and this is how I ride the trend down to the target. When using this style of trading in the market, when using this strategy, you have to pay attention to your directional bias. So this is on the Friday. This is the last move price did on the Friday during the NFP news. So paying attention to this area, you can see the price took out this high liquidity here. So here is the liquidity area price took out. So I'll be giving you a directional bias, showing you how I find my directional bias going into Monday. So price took out this liquidity, broke structure to the downside. So after this break of structure to the downside, we're expecting price to pull to the other block or supply zone. So if looking at this area, you can see that here is the supply zone, and you can see the price pulled back to that area, and so far price have been trading to the downside. So going into Monday, I'll be paying attention to the price action. I'm thinking of taking a sell to the downside. So the only way I take a sell from this area is where I have a confirmed directional bias from the 5 minutes. So when I have a clear entry on the 5 minutes, that is when I take a trade. So having a clear entry is seeing that the London section opens. I need to see a clear sweep of liquidity and a break of structure so that I can take advantage, which means I need to see price do something like this, do a build up of liquidity, sweep the liquidity, break to the downside. Then that's why I think I'm taking advantage with the price action to hit this target here. If you're interested to learn my strategy, make sure you join the Telegram channel and join the private group chat where you have access to my trades, have access to my educational content. We have a complete free, it's absolutely free. So just join it and have full access. Make sure you like and subscribe to the YouTube channel and turn on the notification bell to get alerted when I drop new videos, doing market breakdown, showing you strategies that I use in the market. So see you in the next video.